I'm Becky, and I'll be sharing today about the different ways you can use a credit card, both good and bad. Credit cards can suck. You have to be pretty smart about how you use them in order to avoid some of the things that can happen, that can be expensive or can get you into trouble on your credit report. Credit is really important when you want to do certain things. Using credit cards irresponsibly can put you at risk to pay on one balance for years, pay extra on fees and interest, and get into more debt than you can afford. Establishing good credit is essential for many aspects of adulthood. Opening bank accounts, renting, buying a vehicle, buying a home. If you've used your credit badly in the past, paying late or having too high of a balance, that can make it harder to do those things that you want to do. I'll be sharing some of the things that I've learned while establishing my own credit, as well as the things I've researched and learned that way. By the end of my speech, I hope to shed some light on how to avoid paying too long, paying too much on interest and fees, and getting in over your head in debt. Let's begin with how to avoid those seemingly never-ending payments. Paying only the minimum can get you into trouble, and you can pay for a really long time. Using Capital One's credit card payment calculator, I came up with an example to share with you. Say you had a $2,000 balance with an average 14.99% interest rate, and your minimum payment was $30 a month. By only paying the minimum, it could take you 12 years and 1 month to pay that off. That's crazy. And keep in mind you didn't add any money to that $2,000. By adding just a small amount more to that minimum payment, say $5, you can cut that payment time frame down to only 8 years and 5 months. That's still a lot, but it's a difference of 3 years and 6 months. Paying the balance off faster not only helps by making it one less thing you have to worry about, but it will also save you money in interest over time. Credit card companies make money by loaning money to people and charging interest on the amount borrowed. The longer it takes to pay back, the more you pay in interest. Also, if you ever go over your limit or pay late, they can charge you fees and get more money out of you. Let's take that same example of the $2,000, and if you paid that minimum payment of only $30, over the course of that 12 years, you would pay $2,321.88 in interest. A total of $4,321.88 for only a $2,000 purchase. Now say you bumped that payment up by $5, you'd only pay interest of $1,527. Still crazy, but substantially less. Paying late even once or by 1 day can put you at risk for a fee. I know that's happened to me a couple of times, so the best advice I have is to plan to pay it early so that if you do forget, you still won't be charged a fee because it won't actually be late. Also, make sure you don't let your card get too close to its limit. If it goes over, even because of the interest they charge you, they can charge you for being over the limit, whether it's a fee or they bump your interest percentage. To avoid these things will save you money and it will help you pay it off faster. I'll explain the other reasons why maxing your credit card out can be bad. One of the things that lenders look at is the amount of credit you use as opposed to your limit. They want to see that you use your credit, but that you don't rely on it. If the percentage you use is too high, lenders can view this as a risk that you may be relying on that credit. Using your card too often is also an indicator that you rely on the credit. I find that I see that on my credit report. They label it as excessive use of credit. Even if I'm paying on time and paying more than the minimum, it can still make my credit score go down because I'm using the credit card too often. Let's go over what we've talked about. Once more, The irresponsible use of credit cards can potentially lead to endless payments, ridiculous interest charges and fees, and the seemingly overwhelming burden of debt. An old Yiddish proverb says, "Interest on debt grows without rain." I think that accurately describes what can happen if you don't act smart. Remember to think more long-term rather than short-term when it comes to credit cards. The most important thing a person can do when considering using their credit card is to have a plan to pay it back as quickly as possible and to make sure that they're not putting too much of things that they don't need on it.